I'm ready.
Welcome to Stuck Time to Improv. I'm Mary Scott with Business Shrift, and I want startups to be wildly successful. So today we're going to be talking about some fundraising tips with Hall Martin from 10 Capital. He's an investor of some repute and knows everybody. Thanks for coming, Hall.
Well, thanks for having me, Mary. Looking forward to catching up with you.
Yeah. So, how did you get into the startup scene anyway?
Well, I worked for a company that went public and decided I wanted to do angel investing after that. And first deal I put my money into, I lost all of it. And I thought, oh, this is harder than it looks. And then that group lasted for a few more years and went away. And then the city did a restart in 2006 and called it the Central Texas Angel Network. And I said, I got to join a group to learn how to do this. I don't want to do it by myself. And so I signed up. And when you're the first person signing up for a new group, you're automatically on the board in charge of membership. It's a great honor, no pay, but it's a great honor. And one thing led to another, and I had so much fun with it that I became the director of it, and we got about 5 million invested in 20 deals, and we ended up with 2 home runs out of it, which propelled the group onward. Long story short, I had so much fun doing these angel groups, I decided to retire from my day job. 24 years was fun enough, and stepped out and started what was called Texas Entrepreneurs Network. And we were helping startups raise funding from angels. And then 2017, we started getting calls from outside of Texas, Seattle, Chicago. And people would say, I've talked to everybody in my city. Now what? Well, come to us and we'll put you in front of investors in other cities. And long story short, we just kept growing the network that way around the country, where now all of our deals are, evenly spread across the U.S. and the investors are as well. So I just had a lot of fun doing it. And we started a podcast program ourselves called Investor Connect to educate people on how to do startup investing. And we have another thing called the Startup Funding Espresso. And the time it takes to drink an espresso, you can learn something about fundraising. And it's just a short form, 300-word post or a 2-minute audio podcast if you want to listen to it. So that's how we got into it and what we do today.
How do startups find you, or how should startups go about finding their early investors? And what tips do you might have for them?
Well, the first thing is you want to start with your network and raise funding. I do get people coming to me saying, nobody back home would fund me. How about you? And that's not the story you want to lead with. You want to say people back home did believe in me, family, friend. I put money in, family and friends put money in. The local angel group put money in, but they didn't put all the money in that we need. And so now we're coming to you because what you need to do is demonstrate support along the way. Everything you do is supporting you. We ran a crowdfunding campaign and we raised some money. We did a Kickstarter campaign and we raised some money, and we learned a lot of lessons along the way. But generally, you're just demonstrating that every time you go out, other people believe in the idea, they believe in you, and they're supporting it at some level. So that's what investors are looking for, is that support is building, and you want to tell that story to investors when you get to them. And as you draw your circle wider and go across the country and from angel to venture capital to family offices, you're again finding support for what you're doing. Of course, you'll get, for every one yes, you'll get 9 no's at least. And so you have to be ready for that. There's going to be a lot of people that it's just not a fit for, but you have to just keep plugging away to find the ones where it does fit. And you need to tell a compelling story. The first mistake most people make is they want to sell me the product. I'm an investor in your business. I'm not a customer of your product. I don't really need to buy your product. I need to know what it is, but I really need to know more about the business. Who is the team that's selling this? Who is the team that's building this? What kind of monetization model do we have? So those are just a couple of items that we put out to startups to help them raise funding.
And other investors have told me that they invest 70% in the founder and 30% in the idea.
I think in general that's true. And the key is you really have to have a strong team. At the very, very early stage, the thing I coach on is you need to have somebody building it and somebody selling it. No fair, we're all building it and nobody is selling it. So you really need to have a complete team. And as you get bigger, then you need a third and a fourth, and we start to build out the team in a big fashion. And people need to have a track record of working successfully in startups.
And different investors are more interested in different industries, right? So it pays for a startup to investigate, do some research, and find out which investors would actually be interested in their idea.
Yeah, in most cases, especially venture capital and others, they have a website that explains exactly what they're looking for. And so you can look to see, do they invest in deals like mine? Now, most people think, well, I'll just shoot it out to everybody and see who comes back to me. But that's a lot of errant messages going out. It would really be better to get a more focused list to see and demonstrate that when you talk to them. I see you invested in these companies. Well, we're a company in that space, or we're very similar to that. You should maybe consider our deal as well. But one advantage of angels, for example, is they tend to be more generalists. They tend to do broader things. They want a little bit, they're trying to get a diversified portfolio with their own investments. And so they may be easier to hit at the very early stage. But as you need more and more money, Series A and B, you'll move past angels into the venture capital world and family offices where it really pays to do the research on them.
Let's talk a little bit about ballpark sums. When you talk about an angel investor, how much money do they tend to put into a startup?
So angel investors, they write 25 and 50K checks. If you get to a good angel group, they can write 250 to 300 on average. Big groups, Tech Coast Angels and others can write, 500 to $1 million checks for you as well. The high net worths write $100,000 checks. Family offices write 250K on the first round. And then VC funds put in 150 to 500 on the first round. One thing to notice is you take your allocation per each deal and you divide it in half. And you give the first half now, and in 18 to 24 months, that startup will be back around looking for more money. If they're doing well, making the progress, you give them the other half. If things aren't going so well, maybe you don't give them the other half. And so realize that when you get a check from them, you probably got half of what they're planning to put in. And so there's more there to go for when you get to the follow-on round. The key is to show up with the result versus we're still figuring things out, which can be tough sell to get that second check because the story is not new and fresh anymore. It's been around for a while. And so they're going to be looking very hard for results.
And if you're not in revenue, you need to at least demonstrate interest so that you've got letters of intent or some kind of statistics about how people react to what your idea is. So
Well, the
this
best
is
thing is to have an
very,
MVP,
yeah.
something in the market that people can go with. And what comes before revenue is engagement. And what you want to track is how much they're using it, how many daily, weekly, monthly active users you have, and how much time they spend on it. This is what is going to land. In fact, even in the early days when you sell the product and have revenue, they're going to look very hard at engagement. How important is it to their job? How sticky is it? If you took it away, would it really hurt them? And the answer is yes. Well, then this is a very important product versus it's just one of many. So engagement is a real key factor in the early days.
And investors are looking for a percentage of the company they're looking for an exit at some point, right?
That's right. So on each round of funding, if you take an angel round, a seed round is often 500 to 750 for early stage companies. There is the unicorn world where you can add a zero to that, and they're looking at $3 to $5 million for the very first round. But for a lot of companies we deal with here in the Midwest, and we're based in Austin, is you want to raise the minimum amount on the first round because you don't want to give up too much equity. Your valuation is very low, so the watchword is minimum. What's the minimum viable product? What's the minimum fundraise? What's the minimum team we need to stand the business up? And some people come with very grand ideas of $5 million raises at the seed, but you're giving up a lot of equity at that level. So you try to do something very simple. And then with an MVP, you measure how much people use it. Of course, you'll learn a lot about what they really want. And then the next version is often quite different because you figured out the pricing, the model, the packaging is all turns out to be different than what you originally thought it was going to be. But 500K is a good starting point for sure. You see, and people often ask, well, how much should I raise? Well, let's say I gave you 500K. What could you do with that? How much could you get out of that? That's more the answer we usually end up. I can talk about raising $1 or $2 or $3 million at the seed level, but the reality is I'm probably going to end up with 500. So let's just plan around that.
Right. So this has been very interesting. So bottom line, startups, you need to do your research. You need to have a really good team and a really good value proposition before you go talk to investors. Thank you so much, Hal Martin from 10 Capital. I'm Mary Scott with Business Riff. I want startups to be wildly successful. And one of the best things you can do is book a synergy call with me at businessriff.com. And join us again next time for Stuck Time to Improv.